Hey Patrice, how you doing? This is Johnny, DayTraderRockStar, and I'm getting back to you. I didn't get an email back from you. I think I sent an email back letting you know that I was going to do this video for you, and some questions on your trading style and stuff. I was just wondering, just to kind of get a feel for myself. And before I start anything, Merry Christmas, and it's Christmas Eve. Coming to work because I'm still working on the watch list and stuff, but I wanted to kind of get this video out for you because I think videos help a lot more than just typing, and a lot of people always have the same questions, so I'm going to probably use this video, chop it up, use some of it for some other videos, so I hope you don't mind, but this one is directed to you, and then I might just edit it and use some of the material for some other people who have similar questions. Hope your year is good, and hopefully have a great new year. So there's a lot to go into on the Rockbot. First of all, let me just start with the history of the Rockbot. I've been trading a long time, probably full time from 96 is when I started trading full time when I quit my job. I was mostly a stock trader. I didn't really get into futures until after 2000, probably around 2000, 2001, 2002 maybe. And then over time, started to learn a trader out there, George Lane. He was the developer and of the stochastic indicator. Stochastic indicator is how I trade. I'm a divergence trader. So it's an excellent, if you ever get to read up on George Lane. I do many webinars and a lot of reviews on stochastic trading and divergence trading. It's something that I think you should really, if you haven't watched those videos, please watch them. This is by far the best way of trading futures. And now, when you're dealing with the Rockbot, you could apply stocks to the Rockbot. You could apply Bitcoin and the crypto to the Rockbot. But it was made, and again, this is the important part right here. It was developed for myself because I'm a divergence trader, and I've recognized the power of divergence in such a way that I did not want to miss any. So over a process, probably close to a year, I've developed and tried to program it into the NinjaTrader platform using their Ninja script and stuff, and identification and have it running next to my, believe it or not, on a laptop next to me wherever I was. And if I got the alert, I could look at the markets, not being fully in the market. It's mostly going to be for overnight trading, because I was, traders can be very passionate in trading. I love trading, and during the day is great when I'm doing the show, but overnight sometimes we miss some really great opportunities. And again, I trade a specific technique, a very exact technique. And now, over the last few years, I've really tighten that technique into a real tight criteria, a set of criteria that I want to take. The Rockbot is a tool. I consider the Rockbot an indicator. It lets me know when those indicators are lining up and when I have a divergence. All right, and a divergence is basically when the price is making a little low and the stochastics are making that high. And not to go into all this, but that's the first basic thing you have to understand is what the Rockbot is based off. It's based off the divergence the divergence setup. From that point on, it's easy enough to activate this and have it automate your trades. But not every trade is equal, and not every divergence is equal. It's very difficult for automated trading platforms to be, to work well across the board, because you have different market conditions. So this, the Rockbot was never meant as an auto trader, and I kind of told people that in the beginning. I said this is really meant to identify the divergences, and then you go into you go into manual mode. And manual mode means you have to see if other things are setting up for you, which are not included in the Rockbot. The multiple time frames, the next time frame, how good the divergence is the reversal candle there. There's other criteria, and I've been working on this recently, and I'm going to actually do a video this weekend, and you'll get this video. But it really tightens up everything. Let me show you what I'm talking about here fast. if I can find it. I have it on my screen. Here it is. All right, so if I could show you this. Let's go back to, let's see here. Here's the divergence indicator, by the way. This is my entry criteria that the divergence is built off of. This is basically stage 1 and stage 2. Stage 1 is when the market makes a low and bounces. Stage 2 is when it comes down a little lower and bounces, but that little lower causes the stochastics here below to rise up before retesting the lows that it did on the previous low. So you have this lower low on the price, but a higher low on the stochastics, and that's our divergence. And these are the rules I go, and I got everything in rules. Rules are very important for me because it makes me not overtrade, gamble, do a lot of things that traders tend to do. So with that said, that was our rule for the divergence. So we programmed that. I programmed that into the bot. Now the other things that lead up to that, if I could, are some other indicators that I watch. These are called the 5 indicators. Is it on a price on a confirmed trend line, on a moving average? Is there recognizable patterns, support and resistance, and the wild cards? The stochastic divergence here is the first setup, and that's why the Rockbot is an indicator. It's an indicator that lets us the divergence is. I need to have 3 other things line up on the chart for me to be able to take that trade. All right, so it's not an auto trader, so to speak. You can, and we give you the option to do that. And I stress that's very dangerous in this. If we think about the market, let's take a picture of the market here. If we think about the market and what goes through how the market is moving throughout the day and overnight, the market's running on algorithms, black boxes, computers. They're able to read so much into it. When you put your order on your order entry, an automated order, your order goes in as it's set there, and actually you could see that. You could see that on level 2. You can see where the orders are lined up, and algorithms could see that, and they could spike down and they could grab orders. They could stop out people. You could run and stop out people. You could trigger stops and comes back, and it's just a it's not something that it's not an even playing field. All right, but what we do have is understanding divergences. Divergences are our edge in the market, and we do it manually. I do it manually, but I'd like to have the divergence identified for me. So that's what the Rockbot is for. Identify that divergence, and then I want to take the appropriate steps that I have back here. And what I want to do, I want to actually take a look at my rules of trade. Do I have a regular divergence? Do I have a 2-star divergence that consists of reversal candle, trend line, or the time of day? 3-star divergence is a regular divergence. Does it have a reversal candle, trend line, VWAP, or 5-minute stochastic rotation and time of day? And depending on what type of divergence, tells me what's my size, and it also tells me where I'm going to take the profit. The profit is another important part of this. You just can't have an entry without having a great exit. The great entry is always identified, but you have to have a great exit, and that sometimes is a manual thing too. You can't rely on a bot to figure that out. You need the trader's intuition. You need to kind of know what the markets are doing. So all these things are playing out, and it's very hard to let the bot read the market for you. It's going to give you opportunities. Like, I love having the bot running, and it'll give me that divergence, and it'll even get you in it. But in some cases, it might get you in at say 220 right before a Fed number comes out, and that Fed number comes out and it spikes down and takes you out. Or it comes out at certain news times, or it comes out where there's a buy program or a sell program. That's the bots can't handle that. So that's where the Rockbot initiated. It was a divergence indicator where we're supposed to identify the divergence and take the trade off of it. I want to bring up the analyzer for you on the NinjaTrader Strategy Analyzer here. Let's see, here it is. And I'm not sure what yours is defaulted at. Now, when the Rockbot was uploaded and you have the code and stuff, it comes with the parameters that are already defaulted. Defaulted meaning to certain levels. You have all these different ways of working. I definitely recommend trying to optimize it if you could do that. If you don't know how to use the optimization tool on this, get back to me. I'll help you with that. But we'll start off with the back testing. And then the pull down is a bunch of things. Now, you don't have all these scripts because this is on my computer and I'm always building scripts. So the one that you want to be concentrated on is either the 1 minute Thunderbird 1 minute buy divergence and the Thunderbird 5 minute buy divergence. Now, 5 minute divergences are great. I always recommend that over the 1 minute time frame. It just gives you bigger levels. The rules of the trade are the same. You're looking for the same thing. Everything is just applied to a 5 minute time frame. But we'll just start off with the 1 minute time frame because I'm not sure where you were back testing and what you were doing. Now, these are my parameters that I have when I run on the Rockbot. It's usually take profits, 4 ticks, and the lot is how many contracts you have. And again, this is just a standard default thing. It's not taking in consideration market trends or anything. You could have a market that's selling off, and you have a buy a script on here that's looking for buy signals on a downward pressure and downward pressured market. It's going to be much harder than taking the trade to the downside. So that's another thing. Running a buy side script in a down market, and we've had some down markets recently, is not going to work as good as having a buy side script in an upside market. It's just so you got to measure these things out when you run this. You can't just expect everything to run smooth. There's a good time to use the Rockbot, and there's not a good time to use the Rockbot. Again, using the Rockbot to identify the divergences and then understanding the surrounding levels of the trade, current trends, news, volume, anything that needs to go along with that to make your overall decision if you're going to take that trade, or let it take the trade for you and you decide when you're going to get out. Because having one of these things just a little bit off could change everything. You have so many different options here. You can change your options. What is this? This is a 1 minute short super signal. Hold on. I have to go down to, sorry about that. There it is. That's the Thunderbird 1 minute parameters here. Take profits for first profit, you're taking 2 off. Second profit, 12 ticks. These are ticks, basically 3 points. And lots of times in a downward trending market, you won't get a 3-point bounce. Maybe you get a 2-point bounce. But you won't know that unless you're looking at the thing. You can't let this thing run overnight when there's no volume and stuff. So when you backtest, it's taking all these things in consideration. So lots of times you're running it overnight. You shouldn't run the bot overnight unless you're in front of it and you have the volume. What I like to do is run the bot on the time frame over where the market is. Just kind of an example. If the market is in a bullish mode, it has been in a bullish mode this week. So we're going to actually go out to this week, compared to last week. And the instrument, I'll just call it the ES here. Oh, is that the ES20? No, we want to do ES 2022. So the March contract, 2022, that's the next contract. Last price, minute, 1 minute. And I'll just leave this defaulted as it is. It has a signal bar low, which requires the stop to come in at the low of the divergence. You could always change that to adjust that to your stop loss to make it tighter. All these little adjustments on this is going to make a big difference in the results. We'll just keep it on the default right now. I want to just click run, see what happens here. Now, I suspect it's going to be good because the week was really good. And like I said, a strong market always helps buy side algorithms. All right, so here it is. Pretty good profits on this. This is just in 3 days trading. 77% profitable on the trades. Number of trades 63, 49 winners, 14 losers, 0 even. Average trade. It breaks down a lot of stuff here for you. All right, that's not bad. That's that's pretty good. That's having the market in your favor. Now, I could adjust any one of these things. I could probably look for more profits on the first. Maybe I could move. Let's see here. Sometimes I have 2 going out, 2, 2. Let's move this to 20 for some reason. Just 20 ticks. Or I actually put down 30. In a market that's really strong, you want to give yourself a lot more room to advantage that. That's really important. All right, so let's see what happens if it changes at all. Right now we have 1462 as our net profit, 1462. All right. Might not 1462. They brought it down a little. So again, 20, this might be a little too far. So I might want to maybe drop that a little. That's where your optimization is going to come in. It's going to tell you what the best numbers are going to be used. That's really important. And it's very hard on some computers to use optimization. It takes a long time to do that. I wouldn't do a yearly back test either because the markets are so volatile and you can't really, you got to know what the markets are doing to run what script you're going to be doing. Let's see if that changes anything here. I just tightened it up a little. I did some optimization. That's why I think it defaulted at 4 and 2 and stuff. Everything worked here. This is a little bit better. So again, now we're up to 1,600 and profitability is up to 79%, only 80% on this because I adjusted this a little. So, the default, I don't know if you've been just running the default, has to be tweaked depending on what the market is telling you. If the market was heading down, then, you're probably going to get a lot better short setups and you're not going to get a good return on this. You're going to be fighting it. You might not get your profit, your second profit at all. Maybe it gets up only your fourth. And so you have to adjust it. And I know everyone wants that plug and play, just click it. It's going to make money. It's not AI. It's not a learning machine. It's taking the divergence, it's trading them. It's an indicator. But it does identify these divergences for you. And that's, and I don't want you to step away from that. I don't want you to get frustrated on that because that's where you're going to make your most money trading these days, other than buying and holding good stocks. If you're serious in future trading, I want to tell you how to do it. This is very important. You're going to make a lot of money, but you have the focus, discipline, and everything really is required. It is. I can't tell you, even if I step away from the market for a second and I miss a divergence and I end up getting in here, or getting in here because it's running away, I'm giving up a couple points in this environment and I don't get as much. So you got to be able to read the market. The Rockbot is there to help you read that market, to identify those setups, like a divergence here, a low and a lower low and a higher low. And then once you start to develop that and start to see that move up, you're able to get into your position. And on your rotation, you're taking it off. And this is exactly how you want everything to work. So you want to trade these divergences. Some divergences are not all divergences are equal. Mathematically, when I program the script, I'm doing the calculations between what my look back is, going back, I think about 30 bars, comparing each candle to the previous candles, and then also comparing the stochastics. So I'm looking for that divergence, that mathematical divergence where the price is lower than the previous price, but the stochastics are turning back up. And there's a slope to it sometimes that helps. There's a lot of things that there's a couple of checks and balances to make sure we're not just over trading here. We really want to have the momentum on our side. So in some cases you'll get that and you'll get a nice little move. But this was actually a long and then it turned into a short and then the stop come in. But let's see here. I want to get off my train of thought. The entries, when you get a good entry, you have to push that button. That's the important part. Let the Rockbot take the entry for you. Adjust, maybe the Rockbot takes an entry and the market moves so fast that the second candle, by the time it triggers, is up here. And that trailing stop comes in here because the trailing stop is going to come in at the candle low. of the divergence. So that candle low is going to be the divergence. And say that, all of a sudden it triggered and you got in for whatever. This is a huge candle. By the time the candle popped and, and it finished and you got the signal for divergence, it's already up 5 points, which is, a big move. And you don't want to have that stop all the way back down here. If this was a news of generated event where you're going to push back down, it could ruin your profits for the day. It could ruin the statistics that you're running. So you don't know why stocks are popping and giving you a divergence. It could be news, it could be reversals, it could be anything. And that's something that you can't read unless you're in front of it and doing it manually. That's it's frustrating. I know when we look at, I think that's, let's go back to that screen I was just looking at before. Strategy analyzer. All right, and so adjusting these makes a big deal. It doesn't have to be 5 lots. Your trailing, your stop loss, it doesn't have to be a signal bar loss, a low. Sometimes that you could change that a bit. I'm just going to change it to ticks and just see what happens if we keep that to, let's keep that to 12 ticks. And I'm just curious. So it was 1662. Now we moved it to 12 ticks instead of signal bar low. Look at that. $12.50. Not pretty good, right? That's why the signal bar low is really important. Remember, when you have a divergence, put your divergence stop under the low of the divergence. That was something I updated on the bot to kind of help us. Also, start trading with the MES. The MES is, a lighter version of the ES. It's 1/10. It's a micro instead of the regular mini. And it enables you to learn more without, kind of getting out the bugs in the system and tightening up the system and method that you want to trade. Everyone has a little different personality type, and I think that also is big on trading. Some people tend to let things go and gamble a little bit more. Some people are exact. That type A personality, they're just in and out, and they're like a machine themselves, and that's great for trading. Well, I'd like to work with you a little bit more on this, but I would like to see what type of trader you're that you would like to become. Your time frames, how much time you have to dedicate in the market. All these are going to play an important part. The best thing I could tell you right now, the tradometer was originally built as an indicator to identify those divergences. It's given to lifetime members. Because that's just something I like to do as a benefit. But as I say, I don't promote using it as an auto trader. What I do promote using it as an indicator, letting these things and then learning the methodology. Going on manual control, have that on cruise control. A divergence sets up. Then take the trade, understand where your stops are, understand how to take profits in a trade, on your first rotation. This is something I could, pretty much, which I have done, actually. And you'll actually see a lot of the videos I've done have really broken down the scenarios that you're looking for and what you want. So I want you really to concentrate on these 1, 2, 3 star type of setups, regular divergence with a reversal candle. If there's a trend line, and if there's a 5-minute rotation, you really want to concentrate as a trader as 2-star divergence, 3-star divergence. These are the ones who are really going to give you. And when we talk about how much to put into these, that's relative to a lot of different things. If you're a newer trader and you're just learning, if you're an advanced trader and this is just something you're using as another tool, and you have money and you understand risk management and stuff, you can adjust these amounts. This is the basic. This is a low start. Trading the MES, small contracts, low margin. You don't have to worry about too much at risk, and building a business plan around your trading. So these are the things I could help you with. understanding the different contracts. All this is, is actually all written out for you already. So, maybe we should continue on this and see. Let me know what you're looking to gain out of trading. What your goals are? Do you want to be a full-time trader? And if you do, do you have the discipline to wait for the setups, and do you know how to take off trades at the right time? That, and identifying sell side divergences. Actually, this is a long divergence here, but it turned into a sell side divergence right here. So you can go in and out of different things, but you have to have everything lined up. And I really feel there's something to be said of having that human touch behind it. Here's another nice little divergence here. The low, the higher low, the divergence was identified, and it moves up, and then the trailing stop moves up. But sometimes you get a little move, and then it kind of chops around. And sometimes that chop will, if you don't have a good entry, that chop could actually give you a little loss. I mean, you could get in here and have a real tight stop and come back here, not, seeing that it didn't take out the divergence low and not sticking with it, and some trades are going to be better than others. Nice double bottom divergence, relative divergence here on closing price, big move up here, trailing stop. These work out great, but you have to, you really have to know the style of trading. I can't stress it. I can't stress it too much. The importance of taking your profits when you have a profit, and not relying on, well, I need to get 3 points out of this, or I need to make, I need to make $200 or $500 a day. That's going to force you to overtrade. It's going to force you to, just keep things on longer than you should. Very simple. Sorry about that. Very simple rules of the trade. Take the divergence, stop underneath the previous low, take the first contracts off on a rotation above the 80 line. That way you're not worrying about it. If the 5-minute trend line is in your favor down here, it's the 60-10, and you might not be familiar with this. Again, I'd like to know more about your trading experience, and if you understand the concept of the 60 period versus the 9 period and the 14, on the stochastics. If you don't, that's where we have to really start, because your eyes are going to open up. You're going to see the beauty of this, and you'll probably just end up using the tradeometer as an indicator or a divergence spotter instead of an auto trader, which falls to a point where you could get run over on bad news. There's there's better chop. There's chop sometime in the market, and you might get little divergences, but it doesn't give you enough of a profit to trigger what you had as your default profit zone. Say, again, you might have a divergence. You're looking for 8 ticks or 2 points, and it goes up 5 or 6 ticks, and then it rotates back down and takes out the stop. It went up, sure it did. Maybe the stochastics got overbought. Yes, it did. So it should have gave you a question. It should have said, hey, I should take it off here. It's, for a short-term trader. Longer-term time frames require different strategies. And this is the basic. This is the building blocks. This is the foundation. I hope this helps you. I'd love to discuss this more with you and see where you stand. And what else you would like to gain from this. It's the best I could do right now. So, Merry Christmas. Hope that helped a little. And I'll talk to you soon.